Welcome to Striking Options, the show that reveals the options you have to better navigate markets. I'm Jeff Kilberg, and we've adjusted our show until we get back into the studio. I'm joined today by Scott Bauer. Welcome, Scott.
Jeff, how you doing?
Well, I'm doing great, and I want to talk about two topics today. I want to talk about the Fed buying bonds. I also want to talk about precious metals, specifically gold. But a pretty interesting week upon us as we saw markets rebound yesterday significantly. And now we have 2 days of Fed testimony. So what will Fed Chairman Powell be reiterating to the marketplace? Certainly that's a focus, but what are you focused on?
I think that he certainly is going to say, and keep the course that the Fed is not looking to raise rates anytime soon, probably over the next 18 months or so. What I'm looking at also, though, is has the economy really bottomed out? And we probably won't know that until we really see what the reopening is like and how many people are going back out and spending money in the economy.
No, it's a great point. We had a positive retail sales showing that big jump, and that's in the wake of a pretty significant drop in retail sales the month before. But let's dive in to the Fed buying bonds. And really, it's interesting as they provide additional clarity on the purchases in the secondary market. So that allows them to purchase ETFs like an LQD. But talk to me on what your thoughts are, because the Fed continues to hit the hammer on what they're doing and providing the market price clarity. And as soon as that clarity comes in, buyers seem to come in and enjoy equities.
Well, just as many of us thought that, the Fed was maybe out of things to do, they keep recreating ways to stimulate the economy. And this bond buying, program that they announced recently, especially in the secondary market, is just another tool that maybe many people didn't think that they had, that the Fed is willing to go out there and help stimulate this economy.
Yeah, and the Fed impact, we're also seeing the 10-year note. Those yields push higher, above 75 basis points. Pretty interesting move in the 10-year.
That's a real big move in the 10-year, especially, coming from where we were just about 3-4 weeks ago. Certainly not approaching, that 1% level that people may be looking at. But yeah, this is a nice move to the upside.
All right, we'll be on the lookout for the testimony today as well as tomorrow, but it will be interesting to see Fed Chairman Powell reiterate that message. But let's shift gears for a second, because gold, we talk a lot about gold futures, but gold's just not glittering. We're seeing a weaker US dollar, and we haven't really seen gold move up and out of this range that's been persisting in 2020.
Exactly. And as we know, gold typically does move the reverse of where the dollar is going. And with the weaker dollar being where we've seen trade over the last few weeks or so, we would, may have expected gold to be higher. But, I think it's more to the fact that that maybe it's a risk on environment right now, that rather than, with the weakening of the dollar.
So to the additional stimulus that we're not only seeing the Federal Reserve, but global central bankers continue to commit to the marketplace, is that going to be supportive of precious metals? Or to your point, the fact that this weaker dollar is here and now and the gold has not moved higher, maybe gold has the opportunity to test the lower end of the range?
Well, in theory, it really should be supportive of precious metals. But again, with the risk on environment, at least in the short run here, that is really giving the headwinds to precious metals.
All right, Scott. Well, thanks as always. We also want to thank you for tuning in to Striking Options. Please tune in every week as we will continue to strike options.